Hello, guys. Um, I'm gonna ask everybody to please stay on mute. So at the end of in a while we can ask questions, but first everybody's gonna be on mute so I can go all over the explanation I want to give today on the price action on Friday. So we're gonna start right away. Right here we're looking at we're gonna replay Friday. This is the market profile for the S&P 500 E-mini contract, futures contract. And there's just a couple more people joining, so I'm letting them in. We have about 50 people, about 40 people in the meeting, so that's really cool. I'm gonna record it, so you can replay it later also. If you didn't understand something, you can go back and listen to it again. So coming into the day, we see here, this is the previous day profile. And then we have our references here, the previous day high, the close, and we have the overnight profile, which is this profile. And basically, what you're looking at coming into the day is that we have 100% net long inventory. So you know that because from the close, which is right here, all the activity that happened during the night was above that level. So here is a close, and you can see all of the activity is above the close from the RTH close on Thursday. So this is Thursday night coming into Friday morning, which we're gonna play in a second. And we can see that the inventory is 100% net long. So what Jim Dalton says, shadow trader, VWAP trader, anybody who trades market profile, who has their base in market auction theory, we know that 70% of the time we have a correction to overnight inventory. So coming into the day, we're expecting at least some type of correction meaning some selling, because since it's long, the correction will be selling. But it doesn't have to happen, right? I mean, that's just the odds of what you should expect. And also, you don't know if there is a correction, you do not know when it's over. So that's really hard to know when it's over, if there is one at all, which in this case, there was a correction to overnight inventory. And I'm going to explain in a second why all the selling we saw was that correction from overnight inventory being picked up by stronger hands. That selling in form of correction was picked up by stronger hands, which after the selling was done, they just revert their position really fast, and the day ends with a squeeze up. Also, in the tweet I sent early Friday, I said short-term traders are in control, and I'm also going to explain right now in the replay why I knew short-term traders were in control, combined with the selling only being correction to overnight, really screams very loud, do not short, right? Do not expect big selling on the day. Do not expect a big pullback. Like I know the VIX is high. I know Twitter, FinTweet, you know, everybody's calling for a pullback. But really the order flow isn't saying there's going to be a pullback here. At least not for now. Right now I'm looking at the Globex openings with a gap up. So there's no, I mean, I've been saying it in my Twitter. I've been saying I have not seen any kind of red warning saying we're due for a big pullback. I mean, only maybe some correction. But I'm gonna go ahead and start the replay. So I'm not gonna speak too much about that. I'm just gonna start the replay and then go ahead and speak more about that later. So I'm gonna start at 15 times the speed, so it's gonna be kind of fast. I'm gonna use a 5-minute jump start. By the way, this is Sierra chart. A lot of people have asked what's the platform I use for charting. It's Sierra chart. You have to set up your data feed, but the software is Sierra chart. So here is still overnight. There we open, and here we're gonna see it. So this A period, the first 30 minutes in the day, here is the overnight low, here is the close, and we're gonna see how price is selling off, and then hits, I'm gonna stop it right here, hits the overnight low to the tick, right? So each letter here, if you're not familiar with market profile, each letter is one tick. So 4 letters would be 1 point. And these numbers right here are the volume for each tick. And they are they evolve during the day, right? Because it until it stops printing at the end of the day, it evolves throughout the day. So right now, at this point in time, we're only 5 minutes into the trading day. So it's 8:35 in the morning on Friday. We have hit the overnight low to the tick, and that is a weak reference. So a weak reference means that it's most probably gonna be traded again, and it's gonna be broken. Why? Because when price goes to a visual level, like the overnight low, and in this case, the overnight low and also the close, and then backs away, really, it's gonna back away like above here. So I'm gonna play it. It backs away a lot, almost to the open. The open is right here, this orange letter. You see how much it goes after doing the weak low. This is the half back. So automatically, this means that short-term traders are in control. If this was selling from bigger institutions, from bigger players, they don't care about the overnight low. They are just gonna sell 20,000 contracts at whatever price the market is at, or if there is panic in the market, they are not gonna care about overnight lows and closes. They're just gonna go right through them like a hot knife through butter, and they're not gonna care about these type of references, right? Who knows where the overnight low is? Short-term traders, retail traders like us, who just buy and sell during the day and are not interested in longer term positions. So right here, already I know there is short-term traders present in the market. They are in control. There is no institution order flow just now. And now B period is gonna come in. So the first 30 minutes of the day have already passed. You can see how for the whole 30 minutes of A period, we did the low and backed away a lot. This is from 85 to around 92, 93. So that's quite a rally there. Let's give it a couple of seconds here so it turns into B period. So B period opens, and you can see first here another observation. You can see this letter right here is the half back for the current session, and you can see how B period low for a while was exactly at the half back for the session. So we're trading very mechanically. We're respecting references. That is not how bigger players sell off a market. That is how short-term traders trade. They buy at the half back, they sell at the half back, they buy the overnight low. If they are short, they will have a limit order to cover and get out at the overnight low at visual references. So I'm gonna just keep playing. I'm gonna speed it up a bit. So it's going faster now. Just keep that in mind, so you know. So once again, we see B period auction down all the way very near into the overnight low and back away. And we're gonna see this over and over during A, B, and C period, how that's going to happen. Once again, now we have a poor low, and see how it takes a lot of trouble to go through that area. If we had, again, if we had big selling, if we had, 20,000, 15,000 contracts that someone wants to come out of those contracts really fast because of whatever reason, or if there is panic in the market, news or whatever, we wouldn't be stopping and backing away all the way back here while the low is at the overnight low at a visual references. So in this case, what I thought we were seeing was the correction to overnight inventory, which was long. So we're saying selling, meaning correcting that inventory. And if there is going to be any more selling after the correction, we will have to gain acceptance below the overnight low, which didn't happen. Obviously, at the time you don't know, but here is another clue. Now we hit the halfback, which is just the 50% of the range from Friday, the RTH range, the regular trading hours range. We hit to the tick again, a visual reference, and we're gonna back away all the way into the overnight range in a second. So just watch for that. Hit it, visual reference to the tick, come right back in to the halfback again, very mechanical, no big selling. You can see exactly how much we rally from a visual reference. So these short-term traders, we haven't seen any type of selling from institutions, in my opinion, or from bigger players. This is all correction from overnight inventory happening. Now, once again, we start to see value from Friday was this purple shaded area. And currently, most of the activity that is taking place on Friday, I mean, this is Thursday and this is Friday. So most of the activity that is taking place today, I mean, in Friday, is almost the same as in Thursday. So value hasn't changed from the previous day. So we're seeing a trend up. Now, this is a very big clue. You can see how we have excess in C period. Excess meaning it's not a poor low. It's not that meaningful, but it's 4 ticks. 2 ticks is legal. 4 ticks is twice the legal range by definition. So it's an okay excess. And D period cannot touch the halfback. So you see, D period cannot touch the halfback, which was the first place we bounced from. And then it comes in again into the overnight range. So if we're gonna sell off, we have to gain acceptance below the overnight low and start to gain acceptance inside this range, which is the T+2 range, which we didn't do. So this selling very early, I said this selling is weak hands, and they are trying to, you saw how many times they tried to push the price down, sell, and they couldn't really extend the range down. They were getting either absorbed by somebody else, or just they didn't have the vitamins to really sell off the market. Now we're gonna see the fourth clue that led me to believe that we were not gonna sell off during the day, which is here in D period. For now, we are one time framing down, meaning that one time framing is that this period took the low from the previous period. This C period took the low from B period, and they didn't take their highs. So we're trending down, lower lows and lower highs. But in D period takes out the C high. So you're gonna watch that in a moment. There. When D period takes out the C high for 2 ticks, more than 2 ticks, but just by taking it 2 ticks, that's legal to stop one-time framing by definition. And automatically, you know that the odds for the day to be a trend day are very low, because we stop at one time framing in the fourth period of the day within the first 2 hours. And the odds for a directional day have decreased, at least to the downside, they have decreased. So you see, it's not one thing that you have to analyze, it's many data points, and obviously watching the market develop in real time, having a feel for it, putting a lot of little nuances together to really not to predict where price is going, but to know where the odds stand into where the trend is going to develop for the rest of the day. We know we're in an uptrend. There is no denying that. You can say the Fed is pumping money into the market. You can say it's a bubble. You can say whatever you want to say. It's valid, but we are in an uptrend. There is no denying we're in an uptrend, and it is not going to end until it ends. So while it lasts, you better be with the trend. I mean, as long as the trend is valid, you have to trade with the trend. Even you're a day trader, you don't care about longer term for the economy. You don't care about the Fed. You don't care about nothing. I mean, you have to see what the order flow is doing. And if the order flow is saying there is no selling, then you have to believe that and be with it. Because if you try to predict what's going to happen in the future and watch, opinions from 100 people on Twitter, and you're going to get more confused than anything other than gain valuable information. This information that I'm showing to you right now is just order flow, is price action. There's no indicators. There's really, it's all market generated information put into context, and what you can extract from this is what's valuable. So it's just the combination of those nuances that led me to believe that we weren't seeing any type of big selling. So obviously from here on, the day started to chop around because there was no bigger players involved in the market. So we had our correction from overnight inventory. Is there gonna be more selling? At this time, now we started to one time frame up after one time framing down. So the market isn't going anywhere. We started going down, now we're up, and the rest of the day was gonna, I mean, you can see how much time we're spending up here while we had tried to sell off many times in this area, in the 85s and the 81s. So what I think happened was that after everybody saw this move down, everybody started to short up here, while some got caught short down here. And then since the action was slow, probably some other people started to short around here. And you have to remember, when people are short, to get out of the shorts, you have to buy. If you have -1 contract in your account, you have to go ahead and buy market to go flat. And when bigger players know this, so when they want to squeeze the market and the panic sets off and everybody starts buying at the same time, they don't need much size to really perk the market up. Also, I want to talk about another very important nuance that this developed during the day. I didn't mention this because I was away from the screens after about 12 p.m. on Friday. But we have a poor high here from Thursday, which has not been traded through in the regular trading hours. So this has to be corrected during regular trading hours to be valid. And now we also have a poor high on the current session. Poor high means we have no excess. We have one tick of excess. You see only one single letter D, and we have here only one single letter G. So we have a poor high here and a poor high here. This makes for exponential odds to be traded through. All of what I'm saying is by definition. You can find these definitions online or on Jim Dalton's books. That's the first place I saw that. Also, I know this from my mentor, VWAP Trader One. You can see his, you have seen his Twitter handle all over my Twitter. I have to give him very, very much thanks to VWAP Trader One, JJ. He's got a room, microfutures.com. I'll post the link when I end in my Twitter. That's where I spent for about a year, and I learned my market profile there. Market profile is one, in my opinion, is the single best tool you can learn if you're gonna get serious about trading. Is the best tool out there to organize the order flow. No indicators is just market generated information, and you extract information. The market profile just organizes the data, right? The market profile is a way to organize data. The data is generated by the market. So whatever you are analyzing is coming directly from the market. There is no indicators, there is no opinions. So you're staying as true to what's happening in the market. Obviously, it takes a while to understand the market profile. It's a very abstract concept. Sometimes, for example, these poor highs, by definition, they are supposed to get corrected, but also means that buyers are getting tired because they are not extending the range. So there was a lot of indecision on Friday. That's why I didn't trade. I mean, it was end of month, end of week. I knew I was gonna be out at about 12 p.m., so I didn't really want to get involved. But I think it's a very good day to replay and to show as an. It's a very good day to replay and to show what happened, because it was a really beautiful day to watch the short-term traders really get short in the hole. And here in J period, you can see after J period, it comes the last hour of the day where usually markups happen. So what's a markup? Why did I say that the Friday was gonna be a high close type of day? Institutions and funds, print their statements on month end, and on Friday, after Friday, we have Saturday and Sunday, which there is non-trading days. So everybody wants to see the market high. So everybody's happy and calm. So they do really, I mean, they high closed it, right? So everybody's happy and there is no panic or whatever. So it tends to happen a lot. Fridays to be a high close type of day. So I will repeat this one more time again. I mean, it's not one thing that I saw that led me to believe that was going to happen. It's a lot of nuances, a lot of data points that have to be put together with a context and viewed in conjunction, and you get a bigger picture view, and then you can start to make assessments on where the market is going. Here on this pullback, you can see we didn't get to the overnight low. So all of the action happened during the overnight low. The day is about to end. We have basically unchanged value or overlapping to high value, because the value area low is higher than yesterday, than the previous days, which was Thursday. So there was really no reason to short. There was no indication. Here in K period, we popped the high. Now both of the poor highs have been corrected. And then from that point on, it's just a shameless markup. They just single print this into the close and they pick up all of the volume up here. I'm gonna just make it fast forward. You can see how they start to mark this up. You can see the volume. As I told you earlier, they don't need much volume to squeeze everybody out. Once everybody's short down here, they just buy a little bit and everybody panics out and has to buy. They hit all the stops. Stops are buying pressure. So you can see, I mean, 500 contracts, 500 contracts, 700, 200 contracts, 100 contracts, 700 contracts, 200 contracts. I mean, that's just very, very, very weak structure here. But it doesn't matter. We're in an uptrend, and the uptrend is not gonna end until somebody wants to sell. And right now, nobody wants to sell. So there's no reason for you to sell if nobody of the bigger players wants to sell. Just go on with the show, play the show, play the trend, be smart. Don't try to go against the trend because it's not gonna end well. I'm not saying we're not gonna get a pullback any day of this week. We could pull back, and I'm gonna be there to tweet it out. You know, if I see something, if I see excess, if I see, you know, the other time frame coming to the market and start to sell, I alert you guys, let you know to be careful. But for right now, you know, the trend continues. The trend continues, and you better not be against the trend because you're gonna get crushed. So play with the bigger players, play with the trend, and be smart. I'm gonna wrap it up here. I think I held you for a long time now. Sorry if I hope this was of interest for you all. Let me know in Twitter later if you like this. We did record this. A friend is helping me record this, so I'm also recording it. So probably I'm gonna try to post the recording in YouTube or in Twitter or something. I'm okay. I see somebody is asking questions in the chat. I'm gonna go check. Okay, I have the chat up. If somebody wants to type a question, go ahead and type in a question in the. I was like having the biggest brain on FinTwit. I don't have the biggest brain in FinTwit. I wish. How do I formulate ideas of the TPO? I mean, I just said it. It's not one thing. If you can, the TPO, the market profile does not tell you buy here and sell there, right? It's not an indicator. It's not a system. It's just a way to organize the data. Jim Dalton says this over and over. Entries and exits. Well, you're looking for structural places to enter. So, for example, what's a structural place? Say you buy whenever you want to buy. I mean, for example, here, when you see the pullback, maybe you see the pullback, you see the poor high and the other poor high before they were repaired. So you haven't seen this, you have only seen this. So you buy somewhere in the value area low for the day or somewhere around here, and you put your stop below the overnight low. So you want to have some type of, okay, we're running out of time. Oh, okay, we're not running out of time, we have time. So you want to put your stop below the overnight low. You want to have some type of a structural place to lean on. Okay, it doesn't matter what structural place it is, but it matters that you have a structural place to put your stop, so you know you have something to lean on, right? You don't want to buy in the middle of the ranges like before, earlier, when you were seeing that we were going in and then coming back to the halfback and playing around the halfback. You don't want to play around halfback because you have nothing to lean on. You can go either way from the halfback. So you want to have a structural place. Yes, I can do this more often, maybe once a week or twice a week. I don't know. We'll check that out. Where to get a platform? This is Sierra Chart. I'm using TQG data. Okay, guys. I think that's all for now. I don't see any more questions. So how do you know when a big institution is buying or selling? You do not know. You can tell. You can only have clues. I mean, in this case, it's not that I knew that bigger institutions weren't selling. I just knew that the selling was from short-term traders. Why? Because of the price action. We saw it hit the overnight low, then come all the way back up. Then again in B period, hit the overnight low, come all the way back up. Then in C period, hit another visual reference, the halfback, and come all the way back up. When you see stuff like that, and visual levels cannot be broken, is because there is no big size selling. So you don't want to be. So it's not that you're gonna go ahead and step in and buy. You just know that there is no bigger selling. You can. That's all the information. There is no bigger time selling. There is no big size selling. That's everything. It's not that it's not an advisement to go ahead and buy. It's not. It's not that. It's just a data point. You have to put it together with other things. I know some people use the market profile to say, okay, there is no bigger selling. So maybe if I have a system, I have an indicator that says buy, maybe I take the signal. I personally don't have indicators and stuff like that, but I know some people that do that and combine it with profile. There is nothing wrong about that. It's just you add another layer to your analysis. How do I play around data release? You don't play around data release. That's the worst thing you can do. If there's a Fed day, if there is a jobs number, you do not have a position before that. You're flat, and at 15 minutes, 30 minutes, when the data is out, then you start trading, because before the numbers come out, they're just gonna chop you around back and forth. If you're long, they're gonna take your stop. If I mean, you don't trade. You don't have a position when there is data releases and Fed days. If there is maybe you don't even trade. Maybe you don't wait for the print. You don't trade that day. Actually, some people don't trade. So I know some very successful traders that don't trade on those days, because there is a lot of games played those days. And as you say, it's a bet. It's not a trade. It's a bet. And I prefer to keep my trading as systematical as possible, have the odds in my side, and not playing a lot of tickets there, because you're gonna get chopped, you're gonna get stopped, and your risk is not gonna be worth it. So if there is a data release, if there's something coming out that day, you better be careful, because anything can happen. The market can move both ways, and there is really, I don't see any edge in trading those days. And as I said, some very, very professional traders that have been doing this for 10 times more years than me do not trade data release dates or Fed days, for that matter. A combination of weak short-term sellers, a weak low, led to 3482 being a good buy, then correct, plus recognizing that institutional buyers were bringing price back up through weak sellers, correct. Since the selling, I mean, you saw it, the selling wasn't getting any downside. So whomever was short here was targeting lows that were down here, maybe 65. Maybe if you're short, if the people who were shorting 90, shorting 88, shorting 85, shorting 82, they were looking to cover at around 73, 70, 69. These were their targets, right? If you're shorting up at 87, you maybe want 10 points for that short and 177. All of those people did not get even half of their target. So what they have to do is turn around. They are short. They have to turn around, buy, and that buying pressure combined with momentum buyers, because we're in an uptrend. Remember, we're in an uptrend. So buying is going to come in every day because we're in an uptrend. So that pressure is like fuel that lights up and creates this big spike at the end of the day. and squeezes all the shorts to get a high close. Do I use liquidity map? No, I don't use liquidity map. I don't have, I mean, I don't have any experience with it. I cannot recommend it nor talk bad about it. I have no experience with liquidity map. So the shorts who weren't able to produce price below have to buy to close and therefore push the price back up higher to cover losses. That's correct. Investi, that's correct. Okay, that makes complete sense, Gaspar. Thank you. Okay. How do I identify my pivot levels? It's just balance areas and double them and chop it up. There's really not much of a strategy there, but I learned that from VWAP Trader, so I don't want to give it away because it's his strategy, and I learned it from him the way to get those pivots. So maybe you should ask VWAP Trader how to get those pivots because it's his work. Should I cover my short position at 33.65? I mean, I cannot advise on positions, okay? I cannot, never ask me if I will buy here or sell there or whatever, because I cannot advise on that. But what I can tell you is that there is no selling in this market, and we have a gap up today, and as long as we hold this level, 506, for example, if we don't even test 506, we can see my target for tomorrow is 35.30, 35.31 maybe. So we're 15 points away from that target. So that's all I can say. Okay, I don't want to keep this too long because I want to upload it to YouTube, and I don't want to keep the video too long, so it's able to upload there. If there is any questions, please ask. If not, I'm gonna say thank you. I'm really I really like it that almost more than 50 people came in here and watch it. I'm gonna post it on Twitter when it's up. Maybe it's until later because it's got a process and update, so it's gonna be maybe until later tonight. But I'll make sure to upload it. If it's not today, it might be tomorrow, but I'm gonna upload it. Be sure about it. Thank you. Thanks everybody for coming in. Please, whenever you are in Twitter, just hit me up, send me a DM, comment on the tweet, leave a like, so we can make the discussion bigger and more people come into it, and everybody can learn. Even I learn from you a lot of times, not only in trading, but in other stuff also. So thanks for participating, and see you later. Hope you enjoyed it. Thanks.